Hello ladies and gentlemen, I'm Joseph Novichko, Senior Trading Manager with GDM. Today's outlook, we start with Asian stocks. Markets outside of China fell on Friday on the back of declines in offshore markets and of course a continuing slump in commodities. China's benchmark Shanghai Composite Index notched slightly higher, 1.3%, staying on course to extend a six-session winning streak, even as the preliminary China Purchasing Managers Index fell to 48.2, well below the 49.7 forecasted. Japan's Nikkei 225 index tracked the negative leads beyond Asia to reverse Thursday's gains. Major exporters turned negative as the yen bourses into the 123 territory against the US dollar. The dollar, as we speak, is a currency poked above the 124 yen on Thursday after stronger than expected US jobless claims, but went on the back foot as Thursday's yields fell to two-week lows on a continued declines on Wall Street, and of course deflation concerns prompted by sliding commodities. Meanwhile, the International Monetary Fund warned Japan that it needs to step up on reforms or it risks slowing growth, stagnation, and turmoil in financial markets. This is what economists wrote in their annual assessment of the world's third biggest economy. Looking at the land down under Australia's S&P 200 index, it narrowed losses after sentiment declined following poor data from its biggest trading partner, China. The Australian dollar, meanwhile, plummeted more than 1% to 0.7275 against the greenback. This is its lowest levels since May 2009. European stocks pointed to a lower open on Friday following Asia and U.S. markets, lower after a volatile week of mixed earnings and a sell-off in commodities. Speaking of which, the shared currency, the euro, hovered near one-week highs against the US dollar on Friday on relief from Greece taking another step towards a bailout. The euro stood steady at 1.0976 and within a close range of a one-week high of 1.1018 struck overnight. The common currency was lifted after the Greek Parliament approved the second set of reforms required to start negotiations with lenders in a bid to avoid bankruptcy. Still, with the US gearing up for a raise of interest rates later this year, and with Greece's long-term ability to stay solvent still in a doubt, the euro will be declining in the long run. Elsewhere in Europe, British retail sales fell unexpectedly in June, taking some of the luster off the pound following gains that the Bank of England was edging towards hiking rates. Sterling hobbled at 1.5506 after sliding from a one-week peak of 1.5671 on Thursday versus the greenback when it sank 0.6%. Gold in the commodity sector slid more than 1% to its lowest since 2010 on Friday, on course for its biggest weekly loss in 9 months. And as of course, strong US job data helped deepen this week's rout and fueled fears that the metal has some way to fall yet. Gold fell as much as 1.2% overnight to $1,077 an ounce, its lowest since February 2010. It was down 0.6% at $10.84 in late Asia trade. Oil prices edged slightly up on Friday after closing at their lowest in months in the previous session as oversupply and disappointing China factory activity dragged on the market. US crude for September delivery traded 34 cents higher at 48.79 a barrel in Asia trade after closing down 74 cents at 48.45, the lowest settlement since March 31. No major events this Friday, therefore only technical trading will take peak. That's all for today. Thanks a lot for watching. See you next time. Bye-bye.